The 1990s was an extraordinary decade for science, technology, and innovation. It was a decade which saw the fall of the Soviet Union, the end of the Cold War, and the birth of the guy who went on to create the youngest, but still the best, finance-related channel on YouTube. There were two mass genocides in Europe and Africa, but finally an end to the troubles in Northern Ireland with the signing of the Good Friday Agreement. It was also a pretty chaotic decade for the world's stock markets. The 90s began with a recession throughout most of the Western world after Saddam Hussein invaded Kuwait, causing oil prices to rise and the stock market to fall by almost 20% in just 3 months. In 1992, Japan's asset price bubble burst, though its shockwaves didn't spread too far outside of Asia. And in 1998, the Russian government defaulted on its domestic debt and declared a moratorium on all foreign debt. Despite all of these setbacks, the 90s was still a fantastic year for stocks overall. The Dow rose from 2,700 at the start of the decade to 11,600 by the turn of the millennium, meaning it was the best decade for stocks in terms of percentage gains since the post-depression decade of the 1930s. Most of these gains were fueled by the rapid growth of internet and technology stocks, which exploded in the second half of the decade. Today's video comes in light of a humorous suggestion by subscriber Rodrigo Santos, who no doubt was making a joke relating to my day job, but I actually thought it could make for quite an interesting series. I thought I'd start with the 1990s, since it was a decade of vast growth, rapid innovation, and rank speculation, causing enormous gains during the 1990s, but ultimately one of the greatest stock market crashes of all time when the dot-com bubble burst in 2000. Every single stock featured in this video does relate to the internet or technology sectors in some way, shape, or form. Meanwhile, the data is taken from the Ned Davis Research Group and was first published in the Wall Street Journal. Only stocks that began the decade or IPO'd at $2 or more were considered, otherwise the list would be full of penny stocks that enjoyed wild market swings, but are probably all now obsolete and were always rather obscure. Without further ado then, here are the 10 best performing stocks of the 1990s. Where are those companies now? AOL. A business which has had many names, you can trace the roots of AOL back to a company called PlayNet, which was founded in 1984. That company became American Online in 1989, which was later abbreviated to AOL. During the internet boom of the mid-1990s, AOL was one of the major players. By the late 1990s, the company was the world's largest online service, as users, revenue, and profits grew at rates almost without precedent in the stock market. AOL's core business was in supplying a dial-up internet service to millions of Americans, which was expanded to provide a web portal which included an email service, instant messaging, and a web browser. By the year 2000, AOL was so massive that it completed the largest merger of all time when it acquired Time Warner, which remains the largest private acquisition of all time when adjusted for inflation. However, AOL's fall was just as rapid as its rise. The stock price was crushed when the dot-com bubble burst, as AOL lost market share online and to the rise of wireless broadband services, becoming saddled with debt. Having been the 10th best performing stock of the 1990s, AOL was among the worst hit in the early 2000s. And though the company is still running, it was bought by Verizon for just $4.4 billion in 2015, and it now ranks as only the 332nd most popular website in the United States. Cisco Systems. One of few companies in this video that is still running as an independent business and is still floated on the Nasdaq, Cisco Systems was one of a small number of tech companies able to weather the storm of the dot-com bubble, though not without sustaining significant injuries. Founded in 1984 by a couple of Stanford University computer scientists, Cisco specializes in networking hardware and software, and the company's founders played a pioneering role in establishing local area networks capable of connecting geographically disparate computers over a multi-protocol router system. Cisco went public in February 1990 at 80 cents a share, with a market capitalization of $224 million. By the end of the decade, a single Cisco share would cost you more than $50, and the company's market capitalization had risen to more than $500 billion. At the height of the dot-com bubble, Cisco was the most valuable company in the world. Though the company's share price was decimated when the bubble burst, dropping to around $10 a share in 2002, Cisco survived, and it is now bigger than ever in terms of revenue and net income. Cisco turned over more than $50 billion in 2019, and you can buy a share in the business for $46 at the time of this recording. Clear Channels Communications. A mass media corporation now known as iHeartMedia, Clear Channels Communications was founded in San Antonio, Texas in 1972 by Lowry Mays and B.J. Red McCombs, both of whom are now billionaires, aged 85 and 93 respectively. Clear Channels started out with a single radio station in San Antonio in the early 1970s, but as the rules surrounding radio ownership were relaxed in 1992, Clear Channels began to expand. Mass deregulation arrived in 1995, and Clear Channels went on a buying spree, purchasing radio stations throughout the United States, often multiple stations in single cities. In the space of just 6 years, the company's stock price rose from $2.72 a share in 1990 to $73 a share in 1996. The growth continued as the decade went on before taking a hit at the start of the 2000s. Clear Channels was renamed iHeartMedia and taken private in 2006 at a price of $26.7 billion, equivalent to $37.60 a share, and they eventually declared Chapter 11 bankruptcy in 2018. Following a restructuring of debt, the business went public once again in 2019, and an iHeartMedia share would set you back just shy of $16 at the time of this recording. CMGI. Perhaps the ultimate dot-com bubble stock, CMGI was the best performing stock in the United States between 1995 and 1999, providing early investors with a 4,921% return. That means a $1,000 investment in 1995 would be worth more than $50,000 just 4 years later. Once the crash happened though, CMGI's share price fell by 99%, meaning a $1,000 investment in 1999 would have been worth just $10 by 2002. At the height of the company's success, CMGI paid $7.6 million to sponsor the home of the New England Patriots in the NFL for the next 15 years. When the dot-com bubble crashed, CMGI could no longer afford to pay for the naming rights, pulling out of the deal, and the stadium has been known as the Gillette Stadium ever since. Despite the 99% stock drop, the company is still going now, following a string of name changes, and is now known as Steel Connect. Still providing supply chain management to software companies, Steel Connect generated $819 million in revenue in 2019, and a share will now cost you $1.68. I mean, just look at that graph. Telabs. A portmanteau formed out of the blending of the words telephones and laboratories, Telabs Inc. was founded by a group of 6 electrical engineers and came to prominence manufacturing echo suppressors and cancellors for telephones. Founded in 1974, the business enjoyed extraordinary growth during the 1980s, and this success continued during the 1990s. Telecommunications was a hot industry in the 90s, and Telabs were among the sector's 3 big manufacturers. However, the fall would be as hard as the rise, as the telecom industry collapsed in the early 2000s. In 2003, Telabs sold its last plant in the United States and outsourced all manufacturing. The business was crumbling, but it would be another crash, the one in 2008, that dealt the final blow. Telabs lost $1 billion in 2008 alone, and in 2013, the company went private for just $2.46 a share. The business is still going, based out of Texas, and is now owned by London-based private equity firm Marlin Equity Partners. JDS Uniphase. Formed through the merger of California-based startup Uniphase and Canadian business JDS Optics, JDS Uniphase designed and manufactured products for the technology sector. The companies only merged in 1999, but tech mania was such in the stock market that the business still became one of the best performing companies of the entire decade. JDSU's stock price doubled 3 times, and there were 3 2-to-1 stock splits every 90 days from 1999 through to 2000, making virtually every one of the company's employees who held stock options millionaires almost overnight. When the dot-com bubble burst, JDSU's share price went from $153 to just $2. The business went from employing 29,000 people to just 5,300, and in 2005, they completed a 1-to-8 reverse stock split. JDSU was effectively dissolved in 2015, by which stage the business was losing almost $100 million a year. and its operations were split into two new companies called ViaV Solutions and Lumentum Holdings. ViaV Solutions is still traded on the Nasdaq for around $15 a share, and this stock chart suggests that it is viewed as JDSU's long-term successor. Selectron. The second portmanteau in this video, Selectron is a blend of the words solar and electronics, and when Selectron was founded in 1977, it was described as the first electronics manufacturing services business. Though the company started out designing and manufacturing solar energy equipment by the 1990s, they were one of the world's leading manufacturers of an array of computer parts, with clients ranging from PCs and telephones to satellite navigation systems, gaming consoles, and X-ray and ultrasound equipment. Selectron was bought out in 2007 for just $3.6 billion, and I say just because the company had annual sales exceeding $12 billion at its peak. Flextronics bought Selectron out, now known just as Flex, whose stock can be purchased at a price of $16.83 a share at the time of recording. Veritas Software. Founded by two former employees of Intel, Veritas Software, originally known as Tolerance Systems, saw its stock price rise by more than 14,000% during the 1990s. A giant in the data management space, Veritas were unsurprisingly hit hard when the dot-com bubble burst, but unlike most tech companies, they were able to grow their revenue in the early 2000s. In 2004, Veritas merged with Symantec in a deal valued at $13.5 billion, creating the fourth largest software firm in the world at the time. The two companies split again in 2014, with Veritas renamed Veritas Technologies, which is their current name, and in 2015, Veritas was bought out by the Carlyle Group for $8 billion. The Carlyle Group trades on the Nasdaq for $34.55 a share at the time of recording. EMC Corporation. Originally founded in 1979 as a manufacturer of memory boards for computers, EMC Corporation expanded their operations into data and network storage throughout the 1980s. That meant the company was primed to exploit the vast growth in the technology and personal computing sectors during the 1990s. EMC's revenues grew from $120 million at the start of the decade to $9 billion by the turn of the millennium, and their share price saw even greater growth. In 2015, EMC was acquired by Dell in an acquisition valued at $67 million, including debt, equivalent to around $24 a share for existing EMC shareholders. The company is now known as Dell EMC and is a subsidiary of Dell Technologies, who are themselves a subsidiary of Dell. Dell Computer Corporation. Speaking of the devil, Dell Computer Corporation was the best performing stock of the 1990s. Having begun the decade at 57 cents per share, Dell ended the decade valued at $52.69 per share, a remarkable rise of 91,863%. That made Dell one of the most valuable companies on the planet, and the company's founder Michael Dell one of the richest people in the world. What's extraordinary about Dell's growth, in addition to the sheer magnitude of it, is the short time period over which it took place. Dell only really began to focus on the consumer market for computers in 1996, but by 1999, they had exceeded the likes of IBM, Packard Bell, and Compaq to become the largest PC manufacturer on Earth. Dell's share price took a big hit when the dot-com bubble burst, but they were still able to grow sales. It wasn't until 2005 that sales growth slowed, and the stock fell 40% over the next 11 months. Michael Dell took Dell private in 2013 in a deal worth a reported $25 billion. At the end of 2018, shareholders voted to take the company public once again for a touch over $40 a share. Dell's share price has doubled in the 2 and a bit years since, now at $85.35 a share at the time of this recording. So those were the 10 best performing stocks of the 1990s, and where they are now. One notable omission is Microsoft, who enjoyed stratospheric growth during the 1990s, but only enough to finish 12th in terms of their share price. Microsoft's share price has also more than doubled in the last couple of years, making it the second largest publicly traded company on Earth by market capitalization. So that is it for today's video, but thank you all as ever for watching. Give us a like if you enjoyed the video, let me know your thoughts down below in the comments, and make sure to subscribe and turn on notifications for The Reluctant Investor. You can also find me on social media channels like Twitter or Instagram. Our Twitter handle is just at Reluctant Invest.